Hi, it's Matt Samet here with Fortress Financial. Want to talk to you today about global market capitalism. It basically is a look at world stock markets all combined together and how capitalism has driven it. Capitalism can be a really healthy thing, especially in its early stages, because what it does is forces people to provide the best products at the best prices or best service at the best price. And that over time enhances lifestyles. It ends up hiring people, etc. Now, what's happened, I think, is that capitalism has become too smart for its own good. And of course, it's not capitalism itself, but it's people running the system. What has happened, and that's led to these huge problems with income disparities. You see the top end making ridiculous sums of money, whereas the average person out there is barely getting by. Why is that? Well, it's the people running the show are making a decision that how they're going to be paid is through stock options, and how they're going to be paid is through bonuses. That's where they're making huge amounts of money. So how do you get your stock to go up? Well, you cut costs like crazy. And what's the biggest cost for all companies? Employees. You don't give them the raises. You go lean as you can. You do what you have to do to the argument that we're doing this for our shareholders. I would argue that they're doing this in a lot of ways for personal wealth, and we're talking monstrous personal wealth. And it's horrible for society overall. But short term, it can lead to big gains in stocks, so those with money can do very well. Now, looking at it here, in 2000, the market was worth, combined, the cumulative world markets, $32 trillion. The next peak was about 58, 59 in 2007. And the peak in 2015, which is still holding up today, is 71 trillion. So you've seen this higher highs. Now the problem is, again, as we talked about it in another one with the megaphone pattern, we believe we're going to have lower lows. And what can be wiped out in this next crash could be upwards of 60%, or about 45 to 50 trillion dollars of value. That is huge amount of wealth. The problem is many people are leveraged into the system, so they'll be forced to sell a lot of investments at lower prices, which in turn pushes the prices down more, and it just catapults down. Really dangerous. So we think this sort of detoxification of the whole system is going to go on for the next probably 5-6 years. It won't be necessarily a one-step phenomena, because we do have these crazy central banks who love to interject and try and save things, yet all they're doing is making the problem bigger and bigger. Remember, central banks have put about $4.5 trillion into the system. They were at $12 trillion in 2007. It's now at $16.5 trillion. That's a huge increase. And don't think governments have been not guilty. We statistically, they went from $30 trillion in 2007. They've gone up 25 trillion, nearly doubled since that point, to 55, 56 trillion dollars today. Governments are broke. There's nothing but debt. Central banks' balance sheets are leveraged, in a lot of cases with a lot of junk that they don't want, and they're not going to be able to get it off their balance sheets. We got a problem. The central banks and governments haven't fixed the problem. They made it much larger, and when we see downside, it's going to be huge. So global market capitalization, as much as it's nice if you're riding the gains up, the losses will be monstrous. So make sure you're on the right side of that equation. Let Fortress help you with this. Thanks very much.